On to the livestock markets now. Earlier this week, we caught up with UNL Livestock market analyst Elliott Dennis to get his take on the latest news that's impacting the livestock complex. We began that conversation, though, getting his thoughts on the latest cattle on feed report.
Yeah, so there's really two things. First, we're talking about heifer on heifer that were slaughtered, and also cows were the two things that really kind of caught my eye. First, about 20% of all the cattle were cows, and that was about the highest since 2011. And also the heifers that were slaughtered were about 37% of all the cattle that were harvested, and that was the highest since about 2004. Both of those are signaling that we're still having pretty heavy herd contraction, which leads us into next week's report of the cattle inventory report. We should see that come down quite a bit as far as total herd that we're going to see, both retained heifers and also cows for breeding.
What is it telling us about the current herd size in the U.S. and the drought situation, but also feed that some folks are being challenged with right now?
Yeah, I think the weights within the cattle on feed report is probably the most useful, because it really shows the dynamics of like you were saying, the herd and also the drought conditions. In Texas, we saw about 120% increase from the previous year. That's where most of that larger cattle on feed came from. What about 45 to 47% of that was cattle weighing less than 600 pounds? That's very, very light cattle coming into the feed yards. In Nebraska, where we tend to place heavier cattle, we're generally in the 40 to 45% range. We were only in the 30% range this past report, and we really beefed up more in the middle markets or the middle weights. And so what that really was kind of showing me, and where some of that expectation was, is we have the stocker industry really acts as that buffer, and with the accelerated drought, the feed prices, it's really pushing cattle into the market earlier than we would have expected. And there's probably some pricing incentives because prices were much higher than we expected.
You mentioned there's a report coming out next week. Again, high level, what are you looking for in that report? So what are the numbers we need to follow from that?
Yeah, so that report, we can really calculate a couple things. We can calculate the stocker index. That gives us an idea of what is going to be coming through the market as far as stocker cattle. And I'm also looking at heifers that are held back for retention. We have a pretty good idea of what cow slaughter has been, and that gives us the total number of animals that are going to be reduced this year and in the next 12 months. Heifers held back for replacement gives us the idea really of what that beef cow herd and potentially feeder cattle are going to be really in 2023. And so that's the big number I'm looking for, and I think has the biggest opportunity to change.
One of the last times you were on Market Journal, Elliott, we talked about this Prop 12 in California. A judge has come out and halted that. What can you share with our viewers? What's the latest going on there?
Yeah, it really had to do with the federal or the policy not being fully developed as far as the Department of Agriculture. The judge put that on hold and really gives, after that complete ruling comes out, it's about 180 days for the industry to become compliant. And so it just provides, if we're going to enforce this policy, we have to know actually what the policy is going to be doing.
So the news right there is stay tuned. We've got more to come, obviously.
Yeah, absolutely.
Well, let's kind of shift up the conversation here. Broadly speaking, what in the livestock complex has caught your eye recently?
Yeah, so the hay stocks came out, and that was the change year over year between the December 2020 hay crop and the December 2021 hay crop. And really, we saw the effects of drought there, right? Not only are we seeing the effects in total hay inventory, but we're seeing it in the quality of the hay, which is also important. And so we really see that northwestern region pretty decimated as far as hay stocks. And what that indicates to the market is that there are incentives to continue to push cattle forward because, as hay stocks go down, prices come up, and it just is more expensive.
Well, Elliott, let's round out today's conversation, giving the last word. Final thoughts from you, any risk management advice you'd like to leave us with?
Yeah, so I went recently and calculated the value of gain for if we were going to sell an 850 pound steer out of Lexington. That value of gain is about 117. To give you an idea, it's pretty flat between really the end of March to the beginning of May, which means there's no real incentive to carry them longer to try to increase the value you're going to be receiving. So really there's kind of that if you can push them a little more aggressively, sell them in beginning of March, that's going to be pretty much the same price until beginning of May. That value of gain changes given market conditions, and when I calculated that back in October and November, that value of gain to sell that same animal at that same time frame was about 130, 135. So markets do change, and just because that opportunity is there previously doesn't mean that the market will pay you that when you actually deliver the animal, which is why we always emphasize price risk management. When we see those opportunities, we can lock in the price, futures options, livestock risk protection through USDA RMA, and that at least provides some a greater guarantee that we're going to receive that the price that we want at harvest.
Good reminder. Elliott, appreciate you coming on the program this week.
Thanks for having me.